So, welcome to today's podcast. Thanks for joining me as always, and hope you're getting a good kickoff to the year. And you get energized, you get some relaxing time. And so, starting off the year, learning new strategies to protect and build your wealth is hopefully what we can help provide here at Perennial Pride for you guys. So, today's topic is one that you may have come across, and these are nice little sort of quick sayings or phrases that could really be sticky, but sometimes there's more under the hood that you need to understand before you start putting them into place. So there's one that in the world of the wealthy, or you hear these things, and they're not always just for the wealthy, but there are strategies that are you hear maybe often, and there's one that's always caught my attention personally, and I think it is one certainly to consider depending on your situation, is the buy, borrow, and die strategy. Sounds really cool, and well, not the die part, but it's a interesting concept. So today I'm just going to kind of go through some of the high level aspects of it, share some of my take on it and how it could be applied, and certainly give you some things of caution as you get into it, and then you can explore if it's a good fit for you. And whether you are a successful professional or a business owner, certainly can apply in hosts of ways, and we'll talk through those things. So let's break down the strategy pretty simply. I mean, this is really, some of it is not that complicated. There are things that can add some complications to it, but overall it's pretty simple. So let's start at the beginning. Step one is to buy, right? You're buying assets, which anyone's listening to the Perennial Pride podcast at all, we are big proponents of buying assets, especially things that you can own and control more of, whether that's real estate, businesses, and certainly you have a stock portfolio or anything in that nature. So you're trying to buy assets, and certainly we want to use that to build our wealth and start as early as possible, right? Things that can produce, grow over time, maybe hopefully bring some income to you in some capacity, right? And certainly for business owners, you may have a lot of money that's already just tied up in your business that may not be easily accessible, and even homes, right? You may not have access to those dollars until you sell and such, but at least getting those assets growing over time and hopefully generating some income along the way that can be used to apply elsewhere. So hopefully, just like a lot of assets, we want to hold them for as long as we can. And a lot of the gains that may be associated with any of these assets would be taxable once you start liquidating them. And there's certainly other more advanced strategies on trying to exchange those gains, whether it's 1031 exchanges, et cetera, to move those dollars, those gains. But unfortunately, when we start selling assets, that's when we start experiencing taxable events. So this is where the second component comes into play, is to borrow. Because if you sell assets, especially ones that have appreciated, whether it be real estate, stock gains, and your business, to avoid taxation and ensure that asset has the ability to continue to grow and compound and such and stay in your control, is to borrow. And borrowing comes with a whole sorts of aspects of it that people need to be considering. You hear like a Dave Ramsey will talk about never to borrow money. And strategic borrowing is how a lot of wealth can be built. And so this is borrowing against assets, and not to use those assets as collateral to borrow money from another institution, whether it be life insurance, banks, etc. And so borrowing against them can add some liquidity without having to sell your assets. And this can be applied in anywhere, whether it's your life insurance policies that can be collateralized, your business, clearly real estate, your stock portfolio using margin loans. And it's really recognizing that those assets have value, clearly, and that they can be used as collateral to access someone else's money. And that's how you go borrow. So you borrow against those assets in different ways, and you sort of apply them elsewhere, and hopefully for other more productive purposes, but you can use them to obviously consume. But this now doesn't require you to have to sell those assets to use those dollars. Now, the last step is the one that, unfortunately, it's a reality, and we have to face the music on this, is that we have to die. And we are going to die. It's just a matter of time. So in current law, there is a rule around this called stepped up basis. And this is what's in current law today, and a means to pass wealth pretty efficiently to the next generation. And so in this scenario is that if you have an asset that's appreciated heavily over time, say a home or rental property, business, stock portfolio, when you die, then those assets go to the next generation and they get to forgive all those gains that are tied to that asset. And if they liquidated them, say the day that you pass and they take ownership, that all the gains associated with them no longer exist and their fair market value is what it is as of today, and all those gains are forgiven. So it's a really key strategy to consider, and there's been a lot of talk around maybe getting rid of that, and so that may or may not stay forever, but this is a concept today it still holds in terms of being able to use the borrowed money without taxation. But the stepped up in basis is one that current law says that those assets would be the basis of them, or what they value for calculating tax on gain, would be stepped up to the current value. So your heirs would really get a huge benefit of those assets, because if they needed to liquidate them, maybe to help pay for estate taxes or just to use, maybe they don't want that asset anymore, they're going to experience a lot lower taxes, if any, with them based on the current day law. So really powerful tool if really thought through, because when you really boil it down, it's one is that you have an asset that you don't have to liquidate if you want to keep that asset so it can continue to be productive and grow. So to be able to use kind of that asset, you can borrow against it and use for whatever purpose you need to, whether it's consumption or investment somewhere else. And then the gains associated with them can be forgiven in a sense as it transfers into the next generation. So it's a really powerful tool if understood. Now, just like anything else, all these strategies really you have to factor in sort of what comes with it. And this isn't risk free. There's certainly things to consider. One being that the rules that exist today could change. And so when we think about the laws, we talk about stepped up in basis, well, they are fighting that. So there's a point where that maybe is not allowed. And so if everything's betting on this sort of scenario, that, then, this could fall apart, at the time of transfer. So it's something to sort of just be mindful of. And as we know, just in life in general, nothing's going to stay pat forever, likely, for most things. And certainly tax law is clearly one that can change in a heartbeat based on who's in office and kind of the sort of dynamics happening in our economy and such. So that's always subject to being reversed or changed. As it relates to borrowing, and there are some scenarios where borrowing really does not make sense for people, and you have to figure out how you're using it. So borrowing itself can be very lucrative and give you leverage and such. And you hear like a Robert Kiyosaki will tell you to always borrow, right, and use someone else's money. And I do agree, and I've used it just personally myself to build my wealth in a host of ways. But it comes with responsibility, right? Because if you're borrowing it, whether you're borrowing against your life insurance policy, you're using a HELOC against your house, you have to be careful not to over leverage, which is, in the time of this recording, the amount of debt that's out there right now is massive. And, as this maybe potentially reverses course and deleverages, there's a lot of pain that may come with it. And we see where there's, say multifamily sort of syndications where, they've over leveraged and everything has to work out perfectly with cash flow with the interest rates, but they've risen now. That's causing issues. So, people have to just be careful not to over leverage their situation and assume everything's just going to always be working out. And just on that same note is, we're seeing it now that it's how key it is to have access to liquidity. So these sorts of strategies are good, and getting lines of credit in place and such are good because it gives you access to liquidity in your business or in your personal life. But you just have to be sort of responsible how you use it and knowing how much you really will need in given times of fluctuations in life and the economy. And just like anything else with these things, that's why in our family office we really focus on trying to give a holistic view of this. That this is about an investment, managing investment, being smart with borrowing, and then factoring tax law changes, as well as how is this sort of included in your estate plan, right? Which a lot of folks really hasn't thought through their estate plan thoroughly, because it's one of those things we not thinking of that often. Obviously, it's unfortunately our demise when we leave this earth. So, getting ahead of it and being proactive is something I encourage everyone to start thinking about, even if it's a basic sort of plan. But this really needs to be integrated, especially if you're a larger estate, a large business that you are successfully built, or real estate holdings or whatever. That these things need to be taken with care and applied to an estate plan. And that's another thing to factor in of how to. That's why you need to look at it as a cohesive plan together, not in isolation. So the last thing I'll leave with you in this short podcast is, I would start with something very basic. Obviously, you can use your home as you can get a HELOC. Hopefully, you can do that, or your life insurance policy. If you own a permanent one, they have loan provisions included within them that you can start playing with this concept and saying, how can I borrow against these sorts of assets, and then sort of apply them to other assets to hopefully maybe build wealth or your business. And, for an example, for my specific situation, I've leveraged a lot of whole life insurance and the loan provisions within them to invest in real estate, invest in alternative assets, as well as funnel and invest in my business as I'm growing Perennial Pride. And it gives me access to that money that I can control. And in this circumstance, those loans, given the nature of them, are actually don't show up on any credit score anywhere, credit report. They're sort of private. And so for those who feel that's important, this is another avenue to sort of apply that. And so you can control that loan and sort of have some level of freedom around it, and ensure that it isn't exposed or visible to anybody as you are operating. And so it's a key to start somewhere small, and certainly put, just like in any scenario, get that team of advisors around you, tax professionals, certainly financial planners, advisors, and your state plan together, and get that cohesive sort of strategy in place so that it kind of all works together, and you kind of know what will happen if something does happen someday, unfortunately, and because we don't know when that day will come. But if that day happens when you pass, that these things are set into place, and the people who need to know in your life, your business partners, your spouses, and others in your family, understand what's happening, and know what the result will be and what you've put in place. Us as business owners or individuals may try to plan these things out, but and we know it, but do the people who really would kind of realize these things that we pass, do they understand it, what to do with it? It's something I would highly encourage you to also factor that in, and get this plan out to those who are in your world that are going to be the beneficiaries of it, and have to understand how it works. So that's all I have for this episode. I just wanted to be quick to introduce this concept. There's a lot of literature around this and such, but at the heart of it, it's really a good sort of strategy to consider for those, especially building assets, owning businesses and real estate. I encourage you to kind of consider this strategy, and certainly if you need help, I'm more than happy to share my thoughts and research around it and my own personal experience with it. And it's one of these sort of not hidden, but lesser known sort of strategies around protecting and having more tax efficient use of our dollars, and thinking about legacy and long-term planning. And there's a lot of philosophy on that we're going to cover more as the year wears on around this, because one of those areas that I think is less stressed these days is building that long-term legacy. And especially if you're a business owner, you're probably already thinking that, maybe passing on your business to the next generation. So this could be an extremely important tool to use, especially if you have other family members coming aboard to take over the business and maintain it, so that you know these can pass very tax efficiently. So that's all I have today. Hopefully this was helpful, and we'll see you on the next episode of the Perennial Pride podcast.
Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.